But I think it's kind of like, the joke that I heard talking to some people there is that why would you ever invest in a stock if you don't have inside information? Like that was just like, how could you be so stupid?
So, Kir, thank you for joining us today on Zer0es. For those of you who don't know Kir, he's the founder of Scorpion Capital. He's going to be working with us at Muddy Waters with his new activist firm, which we're extremely excited about. Let's kick this off by learning a little bit about you. I guess growing up, were you one of these like fanatics that walked around reading Warren Buffett when you were 6, talking about discounted free cash flow and compounding, or was life a little bit more interesting for you?
I think it was not very finance oriented, so maybe it was a little bit, hopefully more interesting. So I'll kind of tell you the winding path that kind of led me to being a full-time short seller. I was actually born in India. I moved to the Bay Area, a suburb of San Francisco, when I was 7. Grew up there, went to college out there. I always thought I would end up as a lawyer or as a doctor. With Indian parents, they loved the MD thing. So there's a lot of interest in having a son who's a doctor. I think it was not until I actually got into business school, kind of in my late 20s, that my parents actually told me that, well, it's actually okay, we think, if you don't go through the medical school. And then in high school, I was a debate nerd. I was in the speech and debate team. Some people do sports, some people are into kind of music, and I was a debate geek. And a lot of people that throw themselves into that activity, they tend to end up in law school. So that I'm med school. I actually did my pre-med requirements, I think my senior year of college. Dabbled with the idea of law school. So basically, I had no clue what I wanted to do.
Mm-hmm.
And then I needed to get a job. I didn't know anything about the business. I heard there was this cool management consulting firm interviewing, called Bain and Company. I ran for interviews the night before, found some books on, like how to ace a consulting interview. And shockingly, it actually went pretty well. I ended up at Bain. I think like the $35,000, $38,000 a year salary at the time just seemed huge. So I took the job, and that was kind of my entree into the business world. I didn't follow markets, didn't dabble in stocks at all. It was just, it was kind of feeling my way, through trying to build a career in the business world.
It's funny how you sort of say, you hadn't done a ton in finance or like a huge particular interest in finance, and then you find yourself at Bain. I mean, I think of like Bain, McKinsey, all these top consulting firms as like the steering hand for like the world's greatest CEOs, and then there they are with people in their like mid-20s who basically studied for an interview the night before, and then they're guiding like some of the largest companies in the world. What were you looking at? Who, in terms of sector coverage and the kind of things your clients were asking you to do? And I guess, how did that experience morph into kind of, moving into hardcore finance?
Yeah, even though the Bain experience, for me was a long time ago now. I spent 3 years there straight out of college. It was actually a very kind of formative experience for me, even though I had no clue what I was getting into. And your comments about the model are actually funny. So the instruction there, if a client, CEO, somebody asks you, how long you've been there, what you were instructed to say was, I'm in my first year, as opposed to 2 months. But all those firms, they actually do have a pretty powerful operating model, right? So you have a partner, you have a manager. When you start, it's very task oriented. You're doing research, you're doing financial models. So, and you do get the opportunity to present to some of these CEOs right off the bat if they think you're doing a good job. So I thought it was really powerful exposure. But yeah, the things I learned at Bain, as far as the research process, the analytic process, that actually informs a lot of what I do. So the short reports that I'm publishing these days, they kind of arguably have kind of a Bain, McKinsey, BCG kind of a feel to them. So I'm really a huge fan of of that process. And I still remember the first client engagement that I was on at Bain. It was a lumber company called Pacific Lumber. It was a notorious takeover by this guy from the 1980s named Charles Hurwitz. So anybody watch, kind of Wall Street in the 80s, he was one of these Ivan Boesky kinds of people, and I think he might have gotten into similar kinds of trouble. So he took over this company and he hired Bain to fix it. So I was flying in a puddle jumper into these forests in kind of Northern California, analyzing lumber mills, lumber cost, visiting Home Depot stores to find out, what the inventory looked like, what the pricing was. It was, it was lumber, but you learn a lot, as a new analyst by trying to pick apart these industries you otherwise you'd never encounter.
We at Muddy Waters have had some experience with Canadian forestry companies.
I've heard.
So, in addition to the hostile takeover work, you also spent some time with Bain in India in the late 90s. How was that?
That was really interesting. The last project I worked on at Bain before I went out to business school was it was for the satellite company, kind of the main satellite company at the time that carried all these channels like CNN around the world, and they wanted to enter the Indian market. And Bain at the time didn't have an India office. McKinsey dominated the market, and so they quickly put together, basically I think every Indian analyst that they found 3 or 4, that were kind of in between cases, and they had a partner and a manager, and they kind of shipped people off. To be in your mid-20s, to kind of be living in these very expensive 5-star hotels, it was really a lot of fun, and doing business in India for the first time. India is changed very rapidly, and the 5-10 years after that. At that time, I think Morgan Stanley had maybe 4 people on the ground in India. Bain, McKinsey, BCG, I think we're all working out of the Oberoi Hotel in Mumbai. There was a small little business center, with a couple of copy machines. So the analysts are bumping into each other in the middle of the night during their slide decks, kind of looking over each other's shoulders to see what they're working on. It was, and also just a lot of lessons, doing business out there. And since then, Bain has built up a really successful presence, from what I understand, in India. I presume they probably have hundreds of consultants, tons of clients. But yeah, it was nice to be there, as part of the inaugural team way back.
Did you run into fraud there? I mean, it's a market that we certainly feel is rife with the kind of inefficiencies, and certainly a lot of U.S. listed companies that were based there have had accusations leveled at them. So was that such a thing back in the early 90s, or was it not really things you were focusing on?
So I think it's probably been a thing there since the early thousands, not just the not just the early 90s. Whatever. I was like, kind of a young and dumb analyst, just kind of, trying to crank out slide decks, and I wasn't, following any public companies. But, as I've been a short seller, I think your take is spot on. There are times when I've, done screens of Indian companies trying to find things that could be interesting shorts, and, it's definitely a target rich market, as I think, a lot of, developing markets are. But I think it's kind of like, the joke that I heard talking to some people there is that why would you ever invest in a stock if you don't have inside information? Like that was just like, how could you be so stupid? I think Mexico has a similar problem. There are actually academic studies that have been done on inside information, stocks having these wild moves. And, it just leads to the stock market not having a lot of credibility, and you can't get, proper capital markets. So it does have a lot of ripple effects. So I think the challenge in a place like India is, sure, you can come out with a report documenting fraud at an Indian company. I think, I've talked to people there that have been involved, in meetings, creditor meetings, with significant sized companies. People are having conversations about, how they're going to cook the books, right? So it's kind of like the line from Apocalypse Now, which I think is just, has so many great short seller kind of allegories in that movie. There was a line about they were kind of going after this guy, Colonel Kurtz, who kind of went rogue in the jungle. Martin Sheen, kind of the narrator, said that, kind of tagging life for that was like giving out speeding tickets to the Indy 500. That's sort of, trying to tag people for fraud in markets like that. I don't know, maybe there are stocks where you can develop such a varied perception. I think probably like some really blue chip stock where it's really institutional, has a lot of credibility, the stocks really run up. I think there are probably things out there that check off enough boxes where they could be interesting targets. And it's actually, a fairly deep stock market.
Yeah.
You have tons and tons of public companies. Most of those are, pretty small, but you have enough big ones with liquidity where I think it's, I think that there are a couple of people in India that specialize, in this. I don't know how successful they've been, but I think there's some enterprising short seller out there who wants to really focus in. Yeah, I think there's probably a niche to be built.
So after Bain, things were going well, and then I think you made the decision to turn down several life-changing opportunities. For aspiring, young people out there, there's probably no right path in life, but Kir, I think you certainly had the fortune of turning down some of what 20 years later would have turned out to be the greatest seats in finance. But not to dwell on those. So after Bain, what did you turn down, and where did you end up going?
I had opportunities with, I think it was 3 private equity firms that were, one had just started, and I think all 3 since become, some of the largest global, most successful private equity firms of all time. I think one of them offered me a seat before they had office space. I think it was just kind of like the 3 founders. I wanted to go to business school, and I actually think, one of those, it was an offer when I was coming out of business school. So I've had a winding path that led me to being, a short seller. And, when I kind of look back on it, a number of mistakes, and lessons learned. I was too sucked into what was, trendy at the time, and I was kind of optimizing, for short-term gains. So private equity back then, kind of the early to mid 90s was very nascent. These were not firms that are running, hundreds of billions of dollars. Like, they were interesting. I think if you worked at Bain, there were sexy places to work because there were, some of the most exciting clients, to kind of work on, these kind of M&A due diligence situations for them. So one lesson was that, I just didn't have a sense of what I wanted to do longer term. And I got sucked into what was in front of me, what was trendy, which at that time was the dot-com boom. So I, had a paper in business school, turned it into a company, ended up raising actually a fairly substantial amount of venture capital. And I was in Silicon Valley for 6 years, which in hindsight was actually a powerful experience in a lot of ways. It helped me develop a feel for what's really happening inside companies. That was a pretty small company. I think we could have talked about it, 60 or 80 people. But having a board of venture capitalists, kind of the board dynamics, all the things that happen on the inside of a company, also how dysfunctional, it can be. The lessons I learned in a 60, 80 person company, it's amazing how they can be a 5-10 billion market cap company, and it's the same shit, right? Just on a bigger scale, unless you've actually lived through it, right? So if you've always been an analyst who's kind of doing financial models on the inside, you don't understand, human nature. You don't understand, people's incentives, the ways that they actually act when they're on a board and how they're incented to act. And the other really interesting thing from that experience is just, how promotional, one ends up having to be, right? So you don't raise, 15 million bucks worth of venture capital, as a 28-year-old without selling, right? And those venture capitalists don't get LPs unless they sell. You don't get clients. You don't get, like superstar engineers without selling. And when I kind of look back on it, it is amazing how that promotionalism can really kind of corrupt what you say, how you think, how you act, and I mean that was an epic bubble. Everybody had instantaneous clarity about all that was wrong with it when it popped.
Mm-hmm.
But I still look back, kind of, you just kind of look at the how compromised everybody's minds were when they were living through it. Smart, brilliant, some of the most brilliant people on the planet. Just a very good lesson in, just kind of how a theme, a bubble can really hijack. It can hijack your brain.
Did you have a CEO God complex?
It's funny when I started off as CEO of that company, I was actually very nervous about it. Like imposter complex, right? Like how am I going to get dozens of people, to kind of look up to me? How am I going to have credibility, like with these very prominent venture capitalists on my board? I actually got comfortable with it, very very quickly. So it's just kind of too young to kind of have a God complex about it. But yeah, late 20s, you raise a lot of venture money. Things are going well for a while. The thing everybody wanted to do is, have one of those gigs. So yeah, it kind of goes to your head. You kind of add the, kind of the arrogance and immaturity that kind of comes with being in your late 20s and having come out of business school. So all those dynamics were at play.
But the turtleneck wasn't yet a thing. He didn't have the black turtleneck and the deep voice.
No. It was no. I don't even think Steve Jobs was at Apple at the time. So, but had there been one, I might have been. Maybe I would have worn one.
Nice. So after you wrote that bubble to Zero, you went and joined Carl Icahn. One of the things I really respect about him is he's reinvented himself multiple times from, kind of an arbitrager, green mailer, corporate raider, convert bond trader, bankruptcy expert. What was it like there?
After my .com kind of journey ended, I wanted to get back on the path that I was on, and I needed a way to break in to finance.
Mm-hmm.
I wanted to do investing stuff, and a good friend of mine suggested that I reach out to mavericks, people that might appreciate an entrepreneurial background, people that aren't looking for a typical private equity or hedge fund resume. And he suggested Carl Icahn, and he had actually interviewed with Carl and got an offer and turned him down, and got a meeting. Gave me an offer the next day, and one could spend hours talking about Carl's approach, what makes him so interesting and different. Just seeing how his mind works, right? Just his thought process, which is so different than anything else I've ever seen. Even with people that are billionaires, some of the most successful investors on the planet. I mean, he's a one of a kind, and he kind of has this public persona that you might see, at some investor conference or on CNBC, where there's a certain amount of be a bit rough.
Listen to me. I was called in by Max Meyer to have a conversation, not to argue with you. All right. If you want to take, hello?
Yeah, we're listening.
Well, if you're listening, let me talk. I want to say what I want to say, and I'm not going to talk about my Herbalife position because you want to bully me. All right?
I'm not bullying you. I'm asking the question everybody wants to know, Carl. That's all. But you can make your statement.
What you want to know. I'm going to talk about what I want to talk about. And if you want to take that position, I'll never go on CNBC, So you can say what the hell you want, but I'm going to tell you, I'm going to talk about what Ackman just said about me, not about Herbalife. And I'll talk about Herbalife when I goddamn want to, not when you ask me.
He's kind of a grizzled activist investor, but, he's a savant. And that doesn't come across, I think, in his public appearances. Sometimes, like a super genius. I mean, the way he picks apart complex situations. He was actually, I think he told me once that I think he won the prize at Princeton as an undergrad for the best honors thesis. And he told me that it was, I still remember the name, I think he said it was called a critique of the empiricist criterion of meaning.
Huh.
Which is not the kind of, phrasing that, he uses these days if you kind of see him on CNBC or whatever. But, it kind of gives you a window into his mind. And, it was just a very powerful experience. He's not an easy guy to work for, as I think, people can deduce his personality. But, I wasn't there for a very long period of time. It is a hard place work.
Mm-hmm.
But the things that I learned are ones that I still, carry with me.
Yeah. So look, it'd be nice, Kir, if I just let you off with a few pleasantries about how brilliant a billionaire is, but what we actually want to hear is is about you getting shouted at. So.
Well, if you didn't get screamed at there on a daily basis, it probably meant you were about to be fired. It was a good sign. There was a guy who I think had worked for him for decades, and he said, I think he was a CFO or something at the time. He said, hey, how many times has Carl fired you? And he was like, I don't know, 20, 30. And he said, you just got to show up at work the next day. So he had this scrap metals recycling company at the time that he had purchased out of a bankruptcy. And I actually, I was interim COO of this company. It was actually pretty sizable at the time. That was a whole other entertaining story.
Mm-hmm.
And they were plugged into, steel trends in China, which was a big, they would move the scrap metal market. Bumped into Carl in the hallway and I had some data points about China. So I started pontificating about, China's steel demand. And he just kind of paused, kind of a little bit of, theatrical silence. And he goes, Kir? I said, yes. He said, are you Chinese? And I said, no. And then he said, well, what the fuck do you know about China? And then he threw up his arms and he kind of walked away. So it was, his nose for bullshit is unparalleled.
Yeah. That's great.
Like a very savvy person. So many stories, of that ilk.